Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 5th of October, which of course means that we're now in the fourth quarter of the year with the third quarter behind us. Difficult September, obviously a number of things going on, the US-China trade spat, and something that is really starting to pick up pace now, of course, is the US presidential election, which promises to be a fairly aggressive affair. And of course, we've had another twist in the tail with both the president and the first lady now testing positive for coronavirus. That, of course, could throw the election debate and the election rallies into some doubt over the next few weeks. That being said, various lockdowns around the world have resulted in a return to form for some of the so-called work from home stocks in the US and the technology space in particular, so that the Nasdaq continues to storm ahead. So it's been a generally positive week for markets. In the year to date, the Dow Jones now stands down 2.5%, S&P 500 is up 4.6%, Nasdaq up 26% in the year to date, and our own FTSE 100 remains somewhat range bound, down 23%. So turning to next week, in terms of UK corporates, there's a couple to look out for. Firstly, we're expecting half-year numbers from Tesco. Tesco shares are down around 18% in the year to date. The lockdown not being quite the slam dunk that many had predicted. Of course, they did get higher volumes as people were panic buying, but this came at a cost in terms of additional staff being required and so on. And for Tesco, that ran to several hundred millions of pounds. So we'll look for an update on how that's affected them. Another potential red flag has been Tesco Bank. They previously guided that they could be making provisions of anything up to £200 million for bad debts as a result of economic difficulties in the UK. So that's another thing to look out for. More positively, they had obviously seen those additional volumes and indeed bigger basket sizes. So we'll see what the update brings. Also, Ladbrokes and Coral owner GVC Holdings has a third quarter trading update next week. This is a stock which has rather been more benefiting from the pandemic as people really switched over to online gambling, particularly the likes of poker and bingo in the absence of any sporting events with which to be betting on. Shares are up about 11% in the year today and actually up 200% since the March lows. Bit of froth in the sector as well. We've had this £2.9 billion bid for William Hill by Caesar Entertainment of the States. The GVC company has already got its own joint venture in the States with MGM, so that looks like it could be an interesting space to watch, particularly stateside. So that online versus physical recalibration is something we really need to be looking out for. Obviously, some of the betting shops have now opened, but there has been a shift to online. Thank you for watching. Have a great week.